It's time for the Your Personal Bank Show with Ferenc Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of A Bank in Formation. Take charge of your financial future with Your Personal Bank. Now here's Ferenc Toth.
Welcome to Your Personal Bank Show, and really we've got a hodgepodge of information I want to share with you today. Some current information and some I want to cover a couple of things that come up with clients recently, questions, and just want to dispel some common misconceptions. How's that? But before I get started on that kind of stuff, I just wanted to let you know you want to stay tuned. We got there's a number of cool things that are a number of irons in the fire. We'll put it that way. That hopefully, I'm got to think some of them will come to fruition sometime after the first of the year in the personal bank arena. So nothing's definite. So I can't really say anything yet. But stay tuned because once there's going to be some, like I said, some fun stuff coming up. So as always, stay tuned. The other thing I want to, really talk about, a couple of other things is, recently, we're dealing with another, looks like another wave of shutdowns. A number of states and things like that are doing that. Number of cases, coronavirus cases, of course, seem to be increasing. Number of hospitalizations increasing. That's one of the things I've always paid more attention to. It seems like from everything I've read and seen that the number of deaths, thankfully, has not been going up as much. The hospitals, doctors, medical community obviously have a much better handle on how to treat coronavirus now, especially much more than they did this spring. So that's great. But, of course, it does seem I've never paid a lot of attention to the number of cases. I know the media likes to share that and cause some concern, fear sometimes in people. Because the reason I haven't paid a lot of attention to that is because I think we all know that, there's a certain number of cases where people can test positive and there's false positives and all this other kind of stuff, but also have no symptoms. So it's like, of course, there could be a carrier and stuff. That's important, but, that's, to be expected, I guess. So it's not a great cause of concern. Increase of hospitalizations, ICUs, of course, that's more so. So it just seems like, we got some vaccines that seem to be right around the corner in terms of becoming available, at least for some initial high-risk folks, which is great. And hopefully in the next few months it'll be available for the general public, for anybody that wants to use it or take advantage of it. So it feels like we're kind of in the fourth quarter of this thing. Kind of got to get through the next few weeks, months, I guess. I guess the thing that frustrates me, and I've shared this before, and now that the election is over, hopefully it's not so politically charged, although there seems to be some of that, but I've never really understood the political nature of wearing a mask, not wearing a mask, that kind of thing. You can go back and go to yourpersonalbank.com and listen to some of the previous shows, and all the way back in early March, I started talking about this in terms of how it could impact our economy, our money. I got some flack for it. I've mentioned this several times initially. I even got called by a few folks as being a fearmonger, was the term that was used. And the reality is, all I was doing is sharing some information that at that time was coming from the Federal Reserve. Chairman Powell, by the way, and it's well documented now, started talking about the economic impact of coronavirus back in mid-February. He was one of the first. And so as you listen, any of you that listen to the show know that I'm the process of starting a bank. I'm the chairman of the board of A Bank in Formation. So I'm, highly attuned to that, paying attention to that kind of stuff. And so I guess I noticed it before many others and started bringing it up on this very show. Just, hey, be concerned. This is something to be concerned about. Obviously, within 2-3 weeks of my initial concerns, sadly, everything I said came true and then some. I mean, it was, happened far faster, far worse than I think anyone could have imagined. We've seen recoveries. We've seen a lot of things happen. We've seen a lot of small business struggle, of course, all these kinds of different things, which we just haven't gotten the full fallout of all this yet. But the thing is, what I find frustrating, I'll just put it that way, is I get frustrated when we have these political leaders start treating us, in my opinion, my opinion is they treat us like little kids, okay? I don't know how else to put it. We're adults. And by the way, just as a personal aside, my doctor is 99% sure that I had coronavirus back in mid-late January. I had spoke at a conference in early January in Chicago. Actually, over the Christmas break, I had gotten the flu, just a normal, regular, run-of-the-mill flu, gotten over it. I'd gotten over all the symptoms. I was feeling, I didn't have any symptoms yet, but I wasn't fully back. I was still a little tired, you know what I'm saying, after that, when the trip to Chicago came, and I wasn't feeling my best, but, I had no symptoms, so I was getting over it. So I went and spoke to a group of about 50 folks, investors and stuff, and it was a great trip. Met a lot of great people, have a number of clients as a result from it. But when I came back, oh my gosh, I felt like I hit by a bus. That's the best way to explain it. And the next 3 weeks were, I was very sick. I had the worst flu that I've ever had. And later my doctor, we determined, he has told me with 99% certainty that I had coronavirus. I had all the symptoms. There was about a 6-week period that I, felt the impact from it. And as he pointed out to me at that time, and I get asked about this all the time, so that's why I'm sharing it. When people say, hey, you had it, I said, yeah, I'm pretty much certain I had it. And it was the worst flu I've ever had in my life, no question. I'm not in any high risk category in terms of age or health wise, so I wasn't overly concerned about. Nobody knew what it was back then yet. I just thought I had a bad flu, right? And I got better, and then when not too long after that, all the stuff started coming out about coronavirus. I guess I was a little more highly attuned because I had just gotten over it like a month or so prior. And so myself and my family actually started wearing masks a couple of weeks before the mask mandate started coming out even. So, and the studies and everything have proven, and I didn't wear a mask everywhere. I just wore where it seemed to make sense when I was around a bunch of other people indoors, those kinds of things. Outdoors to me makes no sense. Everyone makes their own decision on that, right? But it's these mandates that bother me. If a governor or somebody wants to recommend, fine. They have every right to do so. I've read that, Biden's talking about asking everybody to wear a mask for first 100 days in office. Well, he can ask. I question how many people are actually going to listen. Some will, some won't. How effective it will be. He has the right to ask. We have the right to listen or not, And I think that decision needs to be made by each individual based on their situation. If you want to wear a mask, fine. If you don't, fine. I also never understood these protests, like in businesses, like going to Costco. Costco was one of the first businesses to really implement a mask requirement into their stores. Well, folks, they have every right to do that. If they want you to wear a purple tutu to shop at their store, they have the right to require that. You also have the right to not shop there if you don't want to. That's what our country, that's the foundations of what our country is built upon. And so I guess what I'm going to say is the numbers seem to be coming up. We're going through another wave. We got to get through this, and hopefully we're rounding third, coming into the fourth quarter on this. But just be smart. And I'm going to say what I wish, now they're not going to listen to me, these government, political leaders, whatever, would do is say, hey, we recommend it. We encourage you, social distance, wear the mask or whatever when it's appropriate. Make the decisions for yourself that make sense. If you're high risk, by all means, lay low. You know what I'm saying? Until this blows over or the vaccine comes out. Just be smart. That's all I'm trying to say. So stay tuned in the next segment. We're going to get into a few other things. I'm going to talk about the PPP, how that's affected some businesses. And we're going to cover today some common misconceptions about Your Personal Bank. So as always, stay tuned.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Wow, that first segment went really fast. I was going to take a couple minutes talking about the current things, and all of a sudden, I get the 1 minute mark. But anyway, like I was saying, just be smart and make your own decisions. And that's what the leaders should be telling us. Just be smart, make your own decisions. Shutting things down, requiring things. Honestly, it's just not American. That's not American. And I'm sorry, it may not be politically correct, and some people may agree or disagree with me on that, but, the election's over now, so maybe, hopefully we won't get so riled up about it. What frustrates me, though, is these kinds of mandatory shutdowns and things like that do occur, whether they make sense or not. It's a whole different argument. Definitely impact our economy, And in fact, it impacts individual businesses in a big way. Particularly, I've got a number of folks, clients, whatnot, in California and various places. They're getting hit hard, and I'm glad to see like the California Restaurant Association fighting back, because they've had situations where they were told only outdoor dining. Many of these restaurants spent a lot of money to create outdoor dining spaces so they can remain in business, and then now these new shutdowns are saying take out only again after they spent all that money. And there's argument, debate whether outdoor dining impacts whether people get coronavirus or not, that kind of stuff. And that's frustrating. These general wide swath, top down, heavy handed approaches, I just think are not smart. It's not wise, and it's not good for individuals. It's not good for business. It's not good for our economy. It's not good for our country. So again, we're adults. We're big boys and girls. Let us make our own decisions. Let us make the decisions that make sense for us. And I was starting to say before the cutoff, and then I'll move on, is the statistics and everything have shown that even before mask mandates and things like other restrictions, stay-at-home orders and all these other things that have been put in place, typically when rates go up, numbers of cases and things go up, people travel less, they go out more, they wear masks more. They're doing these decisions all on their own. We don't need to have, Big Brother telling us what to do. So I wish they would listen. So far, they're not. We'll see what happens. Now, the other thing that's a little frustrating, this is another little pet peeve of mine. Again, those of you that have listened to the show before, I got involved pretty strongly with the Arizona Small Business Association, and grants, and they were grants, not loans. Grants were given out to small businesses, micro businesses, actually. It was what their focus was. Because like the government benefits programs like the PPP program and different things like that, although were helpful for many businesses, unfortunately, for the most part, didn't get to the businesses that needed it the most, the mom and pops, the small businesses, the local businesses that we all think of, that frankly is a big driver of our economy. And I know there's political aspects behind it and all that kind of stuff, but the reality is it comes down to this. Again, big government, top-down approaches, there's a disconnect, okay? And what I mean by that is, like it says this article, I was just reading here, 1% of PPP borrowers got over 1/4 of the loan money. In other words, many of these large, like about 600 businesses, as this article points out, powerful law firms, restaurants like steakhouse chains owned by Ted Turner and operator of New York's biggest horse tracks, receive the maximum $10 million loans from the PPP that are, for the most part, will be forgivable. In other words, the well-connected, the large businesses, the ones that could have survived this probably easier, in many cases, ended up getting money from this program. And a lot of the smaller, mom and pops and the type of businesses that really needed the help, got left out in the cold. And we really shouldn't be surprised. When you have this type of national approach, like I said, top-down, big government, heavy-handed approach, the smaller local, not so well-connected businesses, or any entity for that matter, is probably going to not get the advantage, or like they should. And pretty much that's what happened. I mean, and it didn't surprise me any. Thankfully, some local organizations like Arizona First and things like that stepped in and helped to some degree. But the reality is, depending on how these new rounds of shutdowns, and gosh, I hope our state doesn't do it. I know some states have come out and stated they're not gonna. Good for them. They're not gonna mandate another shutdown. Good for them. Tell people to make a decision, be adults, be responsible, right? We're not little kids, okay? Anyway, I'm hopeful, like I said, that happens here. But there's going to be some fallout. There's definitely businesses that have already gone by the wayside and won't be around after all this is over. What percentage that's going to be, hard to say. It's going to be seems like it's going to be significant. That's going to impact our economy. That's going to impact jobs. It's going to impact. There's a show I did some months ago, early on in the whole COVID crisis part. Maybe I'll bring back some of that back, but it was talk about, you know, the after effect of recessions. You know, we've gone through, you know, the stock market has done well, but again, we talked about how many times that's been really narrowed down to a few, even some points, even one or two companies. The general economy and the market in general has not. Okay. The thing is, there'll be aftermath. There's going to be repercussions from all this. What all that's going to be, we don't know. I mean, we got a blueprint track record from previous recessions and things, so we can see what's going to happen as we grow out of this. One of the positives, like I said, overall I'm positive because, you know, we'll hit a bottom whenever that is, and the vaccine will probably have a lot to do with when that happens and when it becomes readily available and such, hopefully early next year. But, you know, one of the things is as we see an improvement on things in the economy, which will be great. Like I said, I think it's just a matter of getting through now the next, like I said, few weeks, months. Hold tight, and hopefully you've got your money or some of your money somewhere safe and protected so that, you know, you can get through the rest of this turbulence or whatever it may be. But my point is simple, is we should see as things improve, like the banking industry is a great example. I keep close tabs on that for obvious reasons. They've been holding on to a lot of reserve capital, okay? And there's some talk now, I'm starting to see it, where we can expect a release of that capital, maybe one of the largest releases of banking capital in history. And why? Well, you know, we all know that the Fed has printed money, okay? Let's face it. They've printed a lot of dollars. Interest rates have been at historical lows, ultra low. Banks have been holding on in general to reserves because they've been uncertain of the future, what was going to happen with COVID and the shutdowns and everything revolving around that, and the economy and the unemployment. As things start to get on a better footing and things start to improve, they're going to start releasing some of those dollars, and that could move into a flood. You know, there's all kinds of potential possibilities that can occur as a result of that. One that comes to mind, obviously, is inflation could become a factor, because if you have a lot of dollars chasing goods and services, prices of things will increase. You could see, you know, it could have major impacts in the markets. Obviously, with the economy, we could see some significant movements both ways, frankly, some volatility. I'll just put it that way. Going forward, as we kind of come out of this COVID crisis and move into, you know, more stable economy and things start moving forward again. I bring this up all the time. Having some reserves, and your personal bank is a great place for that, is a wise thing, because when opportunities present themselves, and like I said, when things move around like this, opportunities are going to happen, okay? They're going to be there. And if you've got some money available there that you can deploy, and it's safe from going down when things get rocky, because we should see some shakiness going both ways. You see what I'm trying to say? Having those funds in that reserve could really allow you to take advantage of some opportunities. We're going to talk about that more in the next segment, so stay tuned.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to Your Personal Bank Show. And I guess what we're really talking about is kind of the things going on right now, getting through what's hopefully towards the end of this COVID crisis, this last wave, hopefully. Then we get into the vaccines being readily available, and then the economy and things getting back to, I don't think they're going to go back to normal fully in terms of what we thought of last year. Okay, but some level of normal. And in that process, like I mentioned in the last segment, you know, there's been an extraordinary amount of money that's been printed, for example, by the Federal Reserve. Interest rates are at a historical low. Banks in general have held historically high amounts of reserves, cash reserves, because they've been concerned about the uncertainty of what's going to happen. right, with COVID and the economy and unemployment and all that stuff. As things start to stabilize, I think you'll see, and it could be, an unprecedented, largest in history, release of those funds becoming available for lending and other purposes. And that can cause some historic opportunities. And we could see some very interesting volatility. Things are going to be on uncertain ground at different times, both to the good and the bad. And I think we might have a bit of a rocky ride. We'll see in the spring, first, second, third quarter next year. But also at the same time, some historic opportunities I think will present themselves. Now, of course, you have a choice. If you're fully invested, you could stay the course. Obviously, that's one option, and it could all work out. It could be a bumpy ride. It's hard to say. If you stayed the course in 2020, you've had a ride. You've had quite a ride this year, and it's been sometimes stomach churning. If you set some aside, some of that might have been mitigated to a point, if you know what I'm saying. Maybe you were able to take advantage of some opportunities, and that's awesome if you were able to do that, or mitigate some downside when that happened, mitigate some risk. What I'm saying is I believe we have some more of that coming because we're in unprecedented times. We're dealing with unprecedented situations from a macroeconomic level, okay, due to COVID primarily, and all the government and monetary decisions that have been made as a result. So what I'm saying is, if you're paying attention and you want to take advantage of some opportunities, I believe there's definitely going to be some there. It just, seems logical, if you know what I'm saying. And to have some dry powder, have some cash, have some funds available to be able to deploy and allocate when those opportunities do present themselves, that's when it creates historic opportunities for people, generational opportunities for people. And many folks, when I talk to them, clients, particularly many radio listeners, when we chat, and like I said, contact me at yourpersonalbank.com. I'll be happy to discuss this with you and see how this could enhance your financial situation and enhance opportunities. The money is set aside, it's safe, has guarantees, tax benefits, highly liquid, all that good stuff. Earn some interest while it's sitting there, right? And then when the opportunity presents itself, why not take advantage of it and using the bank line of credit, as we talk about. We'll talk about that further and go back to some of the previous shows, yourpersonalbank.com, if you want to learn more about how the personal bank concept works. But basically, we set up a high cash value policy to maximize cash growth, not death benefit, which is the opposite to how most people operate or think of in terms of life insurance. And then we connect it with a bank line of credit, and the interest on the interest it's earning on the policy is higher than what you're getting charged in the bank line. Currently, we've got dividends, companies paying dividends 25 years plus, 6% plus dividends, even today. And the bank lines are in the 3 to 3.95 range, depending on how much funds we're talking about and such. So if you're earning 6, let's say, getting dividends of 6, and you access those funds through the bank line, or you're getting charged in the 3s, what's your money doing? Well, it's being allocated elsewhere. And the answer is, well, it's still earning. You're keeping the difference. You're making 2 or 3% positive arbitrage is the term. The difference is what you keep. So if you think about it a minute, if you use those dollars to pay off debt, for example, you're still making 2 or 3% on those dollars. If you're using those dollars to allocate in other investments elsewhere, you can add 2 or 3% to your return, enhance your returns. It's really that simple. And that's what I'm saying is I think historic opportunities are probably going to present themselves over the next few, let's say, months or quarters. Okay. And if you've got some funds set aside and you've got your eye on something that you think you might want to purchase, but you're waiting for the right price or whatever, why not set up some of it aside in the personal bank? Have it be safe with some guarantees, some tax benefits, all that good stuff, and have access to liquidity to the majority of it, so that when that opportunity does present itself, you can pull the trigger and take advantage of it and pick up an extra 2 or 3% return on it on top of that. If your investment generated a 10% positive return for you, that's great. Do you want to make it 12 or 13 doing the same thing, basically? Well, that's even better. if you can increase your returns by 20 or 30%, would that be worth considering? And that's the type of thing that many of our clients do. And many of the folks, when they reach out to me, are looking at and considering. Now, one of the most common, I dealt with this literally yesterday again. It's probably the most common misconception I get all the time. Well, I'm too old for life insurance. Well, if you're looking at purchasing life insurance from the traditional purpose of what most people do, and that is to provide death benefit protection for your loved ones or your business or whatever, in some cases, your age or health absolutely can cause you to either you can't get it, or the cost is just not cost effective. That's absolutely true. But that's not what we're doing here. As I've stated over and over and over again, repeatedly, and it's kind of, I find this interesting. It's such a common misconception. I wish I could figure out a way to burst that bubble, if you know what I mean, of thinking. We're not setting up an insurance policy to maximize death benefit in most cases. Now, if that's a need of yours, fine, we'll do that. Or if you have some death benefit protection needs, by all means, we'll address those. And we'll address those in the most cost-effective way possible, which many times involves things like term insurance and such. Okay? We deal with that. We do that. That makes sense in those scenarios. But most clients that are talking to me after listening to the show or looking at our information, they go to yourpersonalbank.com or whatever, they're really looking at growing cash, maximizing cash. They like the idea of the guarantees, the safety. They like the idea of the tax benefits. They like the idea of the liquidity and the access to the money and use it if and when they need it. And they also really like the ability to create positive arbitrage on money they spend or allocate elsewhere. I mean, it just makes sense. So my point is simple. The common misconception that comes about is, I had somebody yesterday, literally, he told me he wasn't sure if he could qualify. He's old, and he was in his mid-40s. I had to laugh. I've had people successfully employ the personal bank concept up to age 79. Average health, nothing extraordinary, okay? My point is simple. And I told him, by the way, he isn't old at all. In fact, he's on the younger side, younger than most of my clients that employ, not the majority, we'll put it that way. The point is, because we're maximizing cash and not death benefit, there's less death benefit overall to speak of, which addresses the second major concern I'm going to touch on in the next segment. It reduces the costs, is what it does. It also makes it easier to qualify because we're going for less. Also, because of your age or your health and those types of things, okay, it's less of an impact financially, so there's more cash still available, even to someone with older ages than younger ages. I'm going to talk about this further in the next segment, but I want you to understand, don't let age or health stop you from looking at this opportunity to enhance your financial future. Stay tuned. We'll talk about that more in the next segment.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
All righty, we're rounding third here and wrapping this up, but I want to touch on something I was really hitting on in the last segment. This is the most common misconception that I run into when I talk to people about this concept, and I find this, interestingly, particularly common amongst Money Radio listeners when they reach out to me. And that misconception is, well, I'm too old, or age or health-wise, I'm not going to qualify for the life insurance. Now, let me put it this way. I've successfully employed this strategy with folks up to age 79, okay? So if you're in your 70s, this can still work and work very well. As far as health goes, a lot of people think health issues that they have are going to disqualify them or cause the cost of insurance to go up too high. What the life insurance they're looking at is really life-shortening type of thing. So, yes, cancer, strokes, heart attacks, major health issues like that, say in the last 5 years or so, are probably, yes, those are going to cause you to not able to qualify. But that is still not the end of the road. By the way, I have a number of clients who have had cancer over 5 years ago, have gotten better, and we've employed the personal bank concept to great effect, just so you know. But let's say you're in that situation and you just can't. Well, maybe your spouse qualifies, or maybe a family member or a business associate. And as you can be the owner and they're the insured. We do this all the time, particularly using with living trusts. It's a very commonly used tool where you're the owner, you're the funder, or your trust is, or your business, your entity, whatever it is. Somebody else is the insured, okay? Could be, like I said, a family member, business associate, whatever. And the beneficiary, of course, is the trust or business entity. Now, ultimately, you own the trust or business entity, right? So if you're funding it, or your trust or business is funding it, and something does happen to the insured, the death benefit comes back to your entity, to your business, to your trust. Ultimately back to you, doesn't it? You have control of the money. Who controls the money? The owner or the insured? Obviously, the owner. You have full control of the money. You get all the benefits, the tax, the safety, the guarantees, the tax benefits, the liquidity, all the things we talk about. The 6% dividends currently, all that kind of stuff. You benefit from all that. So what I want folks to understand, and hopefully get the word out, so I have to share this all the time and explain this over and over again, is just because you might be getting up there in years, a few years. By the way, 60s, not old for this concept at all. 70s, absolutely can still work. There's a few criteria we have to go under, but absolutely works well. I have a number of clients in their 60s and 70s, a lot of them, frankly, and this has worked very, very well for them. So I just want you to understand, age, for most people, is not a limitation. And health, again, unless you've had major health issues, and I'm talking cancer, stroke, heart attacks, the big ones, in the last 5 years or so, you have a good chance of qualifying. Okay? And even if you can't, again, we can use a trust or a business entity and a family member, associate, business associate to make that work. And you still get all the benefits that we're talking about. So I just want you to understand, don't discount this because of those reasons, because of age or health. We have workarounds that work really well. And so now you can take advantage of having some money set aside, which again, for many people makes sense. Diversification into a non-correlated asset. I've talked about that in previous shows. Go back to yourpersonalbank.com if you want more information, or listen to the previous show. Again, diversification of a non-correlated asset, again, is just nothing more than you have money set aside that's not impacted in terms of value or price versus other assets. So, great example, if you have money in the markets, for example, and you have money here in the personal bank, the markets take a dive, your personal bank, the funds in the personal bank won't, because they have guarantees, they have consistency. So you're diversifying your money, you're mitigating your risk, okay, which makes a lot of sense to a lot of people. And then again, because of the high liquidity aspect of it, you can take advantage of opportunities. You can also purchase things or pay off bills and do things like that when they come about, and still receive a positive arbitrage, still receive a positive return, typically in the 2 to 3% range. Now remember, some people say, that's not a lot. Remember, that's 2 or 3% you're making on money you spent, on money you allocated elsewhere to something else, to some other investment. What does that do? Well, have you ever made a positive return on money you paid on bills or purchased items? Probably not. What if you could take advantage of that and get some interest back? Would that increase your income? Would that increase your positive cash flow? Would that supplement retirement, or make sure you have more money, or make sure the money you have lasts longer? And the answer is yes to all of those. It would do all those things. That's what I'm saying. This enhances people's financial future. It makes a real difference in many cases on people's financial situation. It makes their money last longer. It allows them to supplement. It allows them to increase their income over time. We haven't dealt with inflation much over the past decade. It could rear its ugly head coming up. We don't know. We talked about in the first couple segments where there could be a huge release of reserves as the economy gets better from banks. We could start be dealing with some things like inflation again. I hope not, but we need to be prepared for those types of things. And by having a chunk of money that even if you spend it still increases, that can help offset some of that. That could help ensure you increase your income in retirement, for example. See, there's a lot of uses for your personal bank and how it can be operated. But as I stated before, don't let age or your health stop you from looking and considering this. Because again, we have many clients we've qualified into their mid and upper 70s even. And even those that we were not able to, we were able to implement tools like trusts and entities, business entities, corporations, LLCs, various things like that, to make this legitimately work for them and still get the benefits. Okay? So we can incorporate all those tools, and I work with folks like that on a daily basis. So I'd encourage you to contact me at yourpersonalbank.com. Be happy to talk to you about this and look at your situation and how it can improve your financial situation for you, your family, and your business. And that's really what it's about, isn't it? It's about having some security. It's about having some certainty about your future. It's knowing that there's some in reserve, there's some money there, that in case things just don't go the way we think they might or something unexpected happens, we're still okay. And your personal bank can help go a long ways to create some of that certainty, some of that security, some of that income, lock in some of that future income, and ensure that it's going to increase over time so that you can have an increasing income source for retirement. You can take some of the tax uncertainty of the future off the table along with it. Again, it'll do a lot of these types of things. So I'm going to encourage you, as always, to contact us at yourpersonalbank.com and stay tuned to the Your Personal Bank Show. We're on every Tuesday at noon and every Thursday at 1 on Money Radio.
Listen Tuesday at noon and Thursdays at 1 for more information on Your Personal Bank. Contact Ference at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and baseline of credit rates may change. Contact yourpersonalbank.com for current rates.